weekend, all, and happy Mother's Day to all the moms out there. This is your weekend edition of your Metals Update, and this is for Friday, the 10th of May, 2019, and we're just getting into the 2:30 time frame. You know something? Look at the stock market. Would you believe the Chinese-American trade deal fell apart? The Chinese showed up 30 minutes late for the meeting. They left early. They were out the door in under 2 hours. The stock market shrugged it off. We know that over the weekend we'll probably see the retaliation by the Chinese. As the president said, no, we're not through negotiating. Negotiations can go on, but here's what we know. The next one is another $325 billion of tariffs. The tariffs that went into place today, they take place, the ships that have left for the U.S. and get here in their normal seafaring time, they'll stay at the 10%. This is where the Americans that have stockpiled all the goods start using what they've stockpiled. So it affects inventory reports and the like. Is it inflationary becomes a question. Gold is right now saying it doesn't know. It didn't get scared by the tariffs going, and let's assume by June 1st these tariffs are in place and the Chinese put their tariffs in place to the like side. Not running. Copper market doesn't quite know what to do with it. It's not up or down. The dollar and the euro pretty flat. The safe haven plays of gold went sort of flat today, as are the notes and bonds, and the money that ran into the Japanese yen is running out fast right now. Not waiting for an hour from now. It's moving out of the market now, maybe into even the stock market at this point in time. The market has done something that's important. We're through with trading the day-to-day headlines about U.S. and China for a while. And I'm not talking a week or so, I mean for a while. And the importance of that is that was getting the market to the point where every morning you'd wake up, it was going like through a Fed Reserve report. You didn't want to do that. We now know what we've got. We can deal with it. As chartists, that's real important. As a chartist, look at the 18-month moving average of closes in red. The market is just sitting on it right now. The overall trend has been lower highs, and we've had lower lows. The market has also been going sideways since 2017. This is one phenomenal base or top that the market is building. Hasn't broken out of it, it's in it. When we come to the weekly charts, you changed a bit of the thrust. On a closing basis, you have higher lows and now higher highs because the settlement's already been determined. It's right in this general area for the market. Are we under the 18-week average? Yes. So the bias is down, the thrust is up, the bias is down in the market. When we take a look at a weekly bar chart and you put a swing line study on this, you still have a pattern of lower highs, lower lows. The bears are in control of the market. You'd have to take out 130910 under the current formation to do what? To break that pattern. Downtrend in place. Resistance, the 18-week moving average of closes, and on breaks, I'd expect the support where it's been for the past 3-4 weeks against the 100-week average. There's another number that you should look at, and that's the Bollinger Band right here. Notice how the top band and the bottom have shifted out of angling, and they're starting to just go sideways. They're not that tight yet, but the tighter they get, the more likely a trend develops out of it. Who's in control of the market at this point? Let's put momentum on. Momentum went slightly flat, and as it did, the market got a bounce away from the Bollinger Band over the last 3 weeks, but you haven't changed the trend. The trend is down, momentum is certainly not pointing up, and the bias is down. At this point in time, I think the bears are defending their position, and even a rally to 1297 will likely be a number that they try to defend being short at. Taking out 130910 would change my opinion. If the market drops from here, I look for the Bollinger Band if you can get through that 100-week average. In the gold ETF, GLD, lower highs, lower lows. But whenever you first hit a Bollinger Band, be it a futures contract or an ETF, I look for that to be the initial support. When you first hit it on the way up, same thing. It doesn't mean it can't break away from there. But the pattern on this was very different than the pattern here. You're trying to develop sideways action, and you were already into a run to the upside here. There's a very big difference in the two. I'm looking for that to have been support. I'm still looking for resistance at the 122.50 level. Momentum has stalled a bit, and you saw that when you hit this week the Bollinger Band, and you came away from that. You rallied $2 off of it. There's nothing, though, bullish on the chart. Another part of the chart that's bearish for gold are the miners. They're not giving us any indication other than they went to the Bollinger Band and it stopped the downside momentum. Is there anything bullish on this? I don't see it. I see lower highs, lower lows. If you get the 100-week average to start crossing and closing under, the 18-week rather, closing under the 100, the green is the 100, that could be another bearish setup, but it hasn't done it. It has just gone sideways right here with the two. We'll see if we in fact get that. Where would you think resistance on a rally could be? I would think right in this area here, 21.77 to 81. And that's about all I can see on the chart. The gold-silver ratio still favors gold. Industrial metals, some not getting a bid. But I'll tell you today, platinum and palladium went crazy to the upside. Would you think that with the tariffs going on, China going to retaliate? It's very fascinating. But you can see right here, silver probably in a much weaker position than gold, and it is. Lower highs, lower lows, momentum is still down. When you first challenged the Bollinger Band, tell me there was a lot to be gained since that. There hasn't been. But I still think the bears are in control, and on rallies, I expect them to be fairly aggressive still in this market. In the copper market, you extended a bit, and that's all I can say, a bit to the downside, but now you came back to that 18-week average and you're trying to figure what next. The pattern is one of a higher high, lower low, and you can see how the price action was going. You came down, you fought a battle that week at the 18-week average. You came down again, and notice where you peaked out this week. Again, you extended the decline, but you came back. That's your battleground. Here's the platinum today. It's refused to close under the 18-week average since way back over here. So the market, while it has a pattern of a higher high, lower low, it's paying attention to the 100-week average and the upper Bollinger Band. There's lots of divergence on this. You've got momentum pointing down, you've got bias up because you're over the 18-week average, and you certainly don't have a trend here. But fascinating how much the market came up. Yes, it was down for the week, $7. Go look at what the daily action was. It made up so much of the weekly loss. Same thing in the palladium market. It's got the pattern of a higher high, lower low. If it rallies, I'm expecting resistance in the 18-week average. If it wanted to continue the decline, the lower Bollinger Band's in play. Momentum, still to the downside, bias to the downside, but not a trending market. Next, we get to the dollar index. Now, the dollar's got the pattern of higher lows, higher highs. Like I say so often, the first challenge out of a sideways market, sideways is the key, of the upper Bollinger Band is often an area that the bears or the bulls, depending first time if you're going up or down, that's where they take money off the table. Then they see if they can trade a trend. And right now, that isn't quite the case. If you rally, those that got out there, they might want to, if they're buying in here, look at that as resistance. This market gets in trouble if you take out last week's low of 96.87. The way the setup is now, you could end up then with lower highs, lower lows into that 18-week average, close under that, and I think you're going to hear people go, be short the dollar. You're not there yet, but that could be the setup. Now, I talk about this and so much more in my morning subscriber video, and I've made a change to this. You know, one of the things I realized, I'm covering all these areas in it, and I didn't make it easy when I first created it to get around it. The video is often 15 minutes long or so. So what we did is we put breakers in it so you can find your area. On the right-hand side now of each of the graphs, and they look like the one you just saw there, it's going to say each of the categories. And I can't believe we forgot to put metals in there, but we did, and we'll get that fixed this week. But you can just click on the category you want, it goes right there. On the bottom, you can pull on the bottom, you know how the players work, and it'll light up and tell you what category you're in so that you can get to where you want. What I can do different in my morning video that I can do from these charts where I'm forced by the law to talk generalities of trends and so on, I can tell you where I think you actually buy and sell. I'm going to say buy here. Here's your stop. Sell there. I had ideas in the VIX today. I can't tell you what they are here. Bingo, away you go. And I cover 40 charts on futures, 5 on the major ETFs. I might even add to it. Now that I've got my sections broken down, I can do it. I'm also able, because I start recording at about 6:15 in the morning, that's Central Time, by the way. It's posted shortly after that. I can tell you what's happened during the day, overnight in Asia, Europe, what the traders are looking for. So if you're sitting there like I often am, and you've got your hand on your chin, should I be a buyer or seller of these markets right now? What should I be doing? Well, here's a spot you might want to go to because I'm not talking to you. I'm talking to lots of you, and I'm telling you what I'm seeing. I'm sticking my neck out every single morning. How do you get to it? It's simple. Go to our website. Under the keyword of research or education, a drop-down menu, just click on it. That'll show up. And from there, all you need to do is go to Ira's Morning Subscriber video. Everything is explained. It runs, if you haven't tried it, 26.5 cents a day. Think you can afford that? It's a 30-day period, so it doesn't matter where you come in. You can quit your subscription at any point you want. You can get a 1-year subscription. You can go month to month after that. Your choice, or quit. What do you got to lose? If you like these videos, you gotta love the next ones. I'm Ira Epstein. Again, happy Mother's Day to all, and I will see everybody come Monday.